Hello, everyone. Good morning, good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. And I'm so excited to welcome you to yet another promising session of the Forex Morning Mastery with Sheriff Daramola. First of all, I want to appreciate every single one of you who has been supportive as regards to my health, and I'm very glad that my voice is getting better by the day. And this morning, I have a better voice, and I'm glad that I will be able to talk and express myself willingly without with less stress compared to my experience I had yesterday. So thank you very much. I really appreciate the positive energy towards me. Today it's going to be another interesting day. First of all, let me thank those who had waited through the course of the time frame I said we are going to be waiting for as a result of technical issues, which I was trying to resolve, calling the contact center and ensuring that we have a top-notch experience out here. So before we kickstart, I would like to confirm that we are good to go. I want to confirm that the sound quality is quite good. Please let me know in the comment section if there are any issues at all, or the video quality of this session. So I'll really appreciate some feedbacks in the comment section, as this will help me to be able to do necessary adjustments that are needed to ensure that we have a better experience out here. I see your comment, Richard Blackett. Good morning to you. Thank you very, very, very much for that feedback out there. So I want to take this as a positive confirmation that the sound quality is good, and the video too. All right, so as usual, the last 48 hours has been quite interesting. Though we had some couple of losses, but we were able to still stay afloat on the positive side of our portfolios, as we captured some interesting trading setup in the last 24 hours, which of course we are going to be deliberating into in the next 30-40 minutes thereabout, depending on how long this is. So I have done a comprehensive price action based technical analysis on the current market structure, which for those who are with me on both my TradingView and Telegram platform will definitely have gotten an update as regards to that. So we are going to be doing an expansion on what I talked about on how we are going to be managing our positions or trading potentials for today. And for those who are joining us for the first time, you're highly welcome. And what we simply do here is to come together as a community in anticipation of both the London and the New York session. And this is going to be a follow-up detail to the videos I shared during the course of the weekend. So we have 4 financial assets we have been monitoring since the beginning of the week. And of course, I had shared a video earlier that was on Saturday, Sunday, on what our plans is going to be like and how we are going to be anticipating the market during the course of the weekend. So we have the USDJPY, the GBPUSD, XAUUSD, and of course the USOilSPOT on our watch list for today. And basically we are going to be deliberating on the 1 hour time frame, which is our execution time frame. So if you do want to have a background knowledge of how we got to this point, or how we were able to identify these key levels that we use as a parameter to guide our trading activity for the week, why not check out the videos? I already have the link in the description box of this current video. You can easily check them out after the session. They are duly time-stamped, so you can easily navigate to whichever aspect of the video is of your interest. So once again, you are welcome on board. So with that being said, here we are going to be diving right into the business for today. And of course, the first thing we normally do is to check on the economic calendar, which of course is very, very important, as we need to have a keep tabs with the fundamental factors that could potentially drive movement for today. And of course, by now, if you had been with me for a while, you will by now understand that these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And with this information, we can have a better timing in such a way that we can position ourselves to capture any potential trading opportunity or any potential move prior, during, and even after the event. So with that being said, let's dive right into the economic calendar. And as usual, we normally focus on high impact event, basically from the economies that governs the currency pairs that we are looking at. So we have the US economy, we have the Japanese, and of course the United Kingdom's economy. But for today, August 2, which is Wednesday, we only have one high impact event, which is coming in from the US economic docket, and that is the ADP Employment Change. So the ADP Employment Change is normally released by the Automatic Data Processing Incorporation, and it is the measure of the change in the number of employed people in the United States. A rise in the indicator is a positive signal that potentially could propel the US dollar to new highs, while a low reading is seen as something negative. So a rise in this indicator, the positive implication of this indicator is good for consumer spending and of course stimulates economic growth. Now from the data we have here, the previous data came in at 497,000 for the month of June, and economists are projecting 189,000 for the month of July. So that is a little bit on, in fact, it's majorly on the downside there, which is not a good signal for the US dollar. So we are going to be looking forward to what the actual data is going to be like for today. Will it be just as expected, below expectation, or even beyond expectation? And of course, as technical traders, what we are going to be looking at is to sniff through the current market structure to identify potential trading setup that could likely evolve prior to this event, which of course we can use to guide our trading activities for today. So without further ado, let's dive right into the chat. I see your comment, Mansoor. Good morning to you. Thank you very much for checking in. I really do appreciate that. So let's dive right into the business for today. Now, the first instrument we are going to be taking on today is, of course, the USOilSPOT, of course, which is how we do it on a daily basis. And I already shared a commentary on this asset on my public platforms. For those who are my TradingView and Telegram platform, you will definitely have gotten an update in that regard. So let's run through that commentary quickly so that we can have a background knowledge of what I said we are going to be doing to manage our current positions on the USOilSPOT. So on the TradingView platform, and I'm trying to. So on the USOilSPOT this morning, let's see what we have here. All right, so this is how we have been managing this asset since the beginning of the week. We have been buying, of course, and I said here this morning that so after a 24 hours period of sideways trading, the US market witnessed a revival of bullish momentum in the later part of yesterday's US trading session. This resurgence prompted the initiation of 2 buy positions, and I said here that we should ensure that all positions are well secured by moving your stop loss, of course, to ensure that you secure your position. And if you had done that, actually, you must have been taken out of all the buy positions currently that we took advantage of. So at this point in time, we are not in any trade right now. As price action, we continue to monitor price action. So let's run through how the week started for us here in this community and what led into the idea of buying this asset. So at the beginning of this week, we saw our price action was initially ranging just right around our key level, and we had a simple flat channel to work with. And you know how we do it. Whenever we have this kind of flat channel, we of course want to wait patiently for either a breakout or a breakdown of that range to give us a potential trading opportunity. And unfortunately for buyers, of course, we saw how price action broke out of the resistance line at the $80.20 level to give us our first buy position for the week. And of course, we were able to capitalize on that move, maximizing the potential of that move by adding more positions at the breakout of the $80.50 level. And of course, we added another one at the $81 area before we were taken out of all the sell buy positions during the New York session yesterday. In fact, it was a very choppy scenario we witnessed during the New York session yesterday, as we saw our price action snapped out from the range we initially identified, giving us something like an indecisive phase. And this was as a result of the economic event we witnessed yesterday. And what was that one again? Let me see. Okay, the ISM Manufacturing PMI, which actually came in below expectation, giving us a negative data from the US economy as well. Now, with this situation here, we begin to see the resumption of buy pressure during the later part of the New York session yesterday. And of course, we anticipated buying had the breakout of the $81.40 level, and of course the $81.75 area. And of course, price action moved from the first position moved about 75 pips, while the second position here moved over 40 pips in profit, giving us a total of 110 pips. And if you had moved your stop losses accordingly, you must have been taken out with a modest size of profit or at a worst case scenario break even. But I don't think you will be taken out at break even on this one, because price action really did move significantly well. Now, with the situation we have right now, how do we intend to position ourselves ahead of the London and the New York session today? So I will be deleting this trend line here, as this is no longer relevant. And then I want us to acknowledge this ascending trend line, which of course has been supporting this bullish momentum since last week's trading session. So let me readjust quickly. So we have an ascending trend line which has been respected in the last couple of weeks now. So I want to extend this trend line a little bit so that we can have okay, so here we go. So during the early hours of today, we saw some bearish momentum breaking down that $81.75 level, and I am of the opinion that we might likely see price action even drop further into that ascending trend line before another wave of bullish momentum happens. That's a possibility we are looking at. Then secondly here, if you look at what happened on Tuesday's trading session, this scenario here, let me give a visual representation. So we have something like this, looking like a reversal pattern here, where the neckline is falling around the $81.40 level. And of course, we saw the breakout of that neckline here during the later part of the New York session yesterday to give us a signal that we have a strong reversal pattern around that area that could potentially push price action to new highs. Now, with the breakout of that $81.40 level, we all know that from a technical standpoint, when price action does break out of a significant structure such as the $81.40 level, we expect that at some point in time price action will come back to retest that structure in the anticipation of another wave of bullish momentum. And what we have noticed here in the last couple of hours is how price action has come back into the structure. So we are at a critical point here where we need to be very patient and see how the market will be reacting to the $81.40 level. Now, there are two ways to it. In fact, I think 2 or 3 ways to it to see how the market will react. First of all, we might likely see a breakdown of the $81.40 level, probably back into that trend line where the appearance of buy pressure and higher lows here could incite an uptrend continuation. So that is one way we are going to be looking at it here. Then the other possible scenario is if you look at the highest point where price action has been for this week, which is at the $81.15 level, and since then price action has been dropping, finding lower highs and lower lows. So we have a lower high here, as you will see, at the $82 area, and then we have a lower low at the $81.40 level. Now, you know, when we start seeing lower highs in the market, we of course want to connect a series of lower highs so that we can get a trend line that we are going to be using to guide our trading activity for today. So if I bring out my line chart and connect the series of lower highs, then we should be having something like this. So I would like to thicken this, or give it a red color, and then thicken it a little bit so that we can emphasize its importance at this juncture in the market. So we have something like this, and then let's bring out our candle chart, do some little adjustment, and here we go. So we have a trend line that we are going to be using to guide our trading activity for today. So what this simply means is that if price action remains below the trend line, then it's very difficult to consider buying at this point in time. It doesn't make any sense buying when price action is finding lower lows and lower highs, of course. So if we are going to be considering buying at this juncture, then we would need a breakout of that trend line to give us a signal that price action is likely going to begin the uptrend continuation. And so what I will be looking out for here is a breakout. Technically, this is what we should be looking out for: retest of that structure, retest of either the trend line or the descending trend, a retest of either the descending trend line and of course the $81.75 level to give us an opportunity to buy the US oil spot. Then if price action goes on to further break out of the $82.15 level, then we have another opportunity to capitalize on this uptrend continuation. However, for those who have been profitable on this asset this week, that is people like us who are taking advantage of the bullish momentum since the beginning of the week, by now we of course have profit in our kitty, so we can afford to leverage on the profit we had made so far this week to test waters around the $81.75 level. So what this simply means is that we can easily have a buy stop order above the $81.75 level, leveraging on the profit we had made so far this week, not waiting for the breakout retest ish to happen before joining that move. But if you are new to the US oil spot today and this is your first trade on the US oil spot, I will be advising you to wait for a breakout, then retest of structure on the lower time frame before joining any bullish momentum here. But if that is not the case, you're already with us on this one, just join in, have a buy stop order, and of course remember you want to be having your stop losses, very important. So you want to have your stop losses below the $81.40 level. You can have between 40 to 50 pips stop loss on this current position, and let's see how far this bullish momentum will go. Then another opportunity lies above the $82.15 level, where we want to be adding more position to our existing trade. So that is how we are going to be capturing any bullish momentum on this current market structure. However, if the opposite happens here and sellers come in to grip the market off the buyers, then what do we want to see here that will make us want to consider selling? Well, personally, remember we have this ascending trend line which was identified at the beginning of the week. We will need the ascending trend line to be broken to the downside for us to start considering selling this asset today. And if this does not happen, there is no point considering selling. So we want to be looking out for the breakdown, retest of that structure to join any opportunity here to sell the US oil spot. So let's see how the market will play out. And of course, if there is any interesting setup that comes up along the line, I will be sharing them with you on both my TradingView and Telegram platforms. So if you have any questions whatsoever as regards to the current market setup or the current explanation I made, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next instrument on our watch list. So you can as well use that time to mark out these levels on your chart, very necessary, as you will be needing them as a reference point to guide your trading activities for today. So let's see if there are any questions. I will be taking the next 10 to 15 seconds. All right, so in the absence of no questions, I want to assume that we're all on the same page. So I will just move right into the next asset on our watch list for today. So the next instrument on our watch list for today is the GBPUSD. The cable market has been quite interesting for us in the last 48 hours. Remember, we have been selling this commodity despite the fact that we are sitting within a very, very strong accumulation zone, which we identified at the beginning of the week. Now, for those who are not familiar with this, I would advise you to watch my video on the GBPUSD to see how important and critical this current juncture in the market is as regards to buying potential. So the link is in the description box of this current video, so you might want to watch it so you can have a background knowledge of what we are going to be deliberating on here. So despite the fact that we are within a very strong demand zone, we have been selling this asset, and this is due to some technical setups we were able to identify at the beginning of the week. Though we started the week on this pair on a very negative note as we had a couple of losses. Remember, let's zoom into what it was looking like at the beginning of the week. So at the beginning of the week, we had a situation here where price action was initially confined within a range that was between the 1.28600 level and of course the 1.28450 level, as you will see here. And of course, you know how we do it. Whenever we have this kind of simple flat channel, we want to wait patiently for a signal to come up, and this will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And considering the fact that we are sitting on a very strong accumulation zone, which we identified on the higher time frame, we anticipated that price is more likely to break out of the resistance line at the 1.28600 level. And in fact, we had our buy stop order above that structure with the hopes that price action will find new highs from this current structure. But unfortunately, on both occasions, we were taken out in a stop loss of about how many 15 pips thereabouts on that one, as we lost on that one. Then subsequently, we begin to see that selling pressure was beginning, and then we had a descending trend line to help us guide our trading activity. So after connecting the series of lower highs, we had a descending trend line. In fact, we had a couple of them to guide our trading activity. And this led into the breakdown of the 1.28450 level to trigger our first sell position. And since that moment, we have been selling the GBPUSD, and see how we rode that move all the way to the downside, added more positions at the breakdown of the 1.28150, which was a level that we identified during our live session yesterday, and we said we are going to be capitalizing on the breakdown of that structure to join that bearish move to the downside. So it was quite an interesting bearish opportunity for us in this market as we rode the move all the way into the 1.27840 before we begin to see the emergence of buy pressure around this area, making it difficult for the sellers to break through that level. Now that we are going into the New York and London session today, what is going to be our plans? Well, I already shared an update on both my TradingView and Telegram platform, and for those who are with me there, you will be familiar with how we are going to be managing our current position on the GBPUSD. So let's run through the commentary on how we said we are going to be managing trading opportunities on the GBPUSD for today. So this is my commentary on the TradingView platform. I also shared this on my Telegram platform also. So for those who are on my Telegram platform, you'll definitely have gotten this update too as well. So I shared this an hour ago, and this is what I said here. I said, after experiencing a robust bearish momentum at the beginning of the week, which yielded more than 160 pips in profit from two positions, the GBPUSD market is now witnessing a resurgence of buying pressure. This is evident after as higher lows re-emerge, signaling the potential for a bullish momentum build up, especially ahead of the ADP Employment Change data release from the US economic docket. Notably, the price action seems to be transitioning into a reversal pattern resembling a double bottom formation as sellers struggle to push below the crucial 1.27840 zone. Additionally, a neckline has been identified which aligns with the descending trend lines. A successful breakout and retest of this neckline could create favorable buying opportunities for us. Now let's go back into the chart and see what is going on here. Now if you look at the structure closely, you will see that since in the last 20 hours or so, 19 hours or so, price action has been consolidating and falling into that range between the 1.27980, as you will see, and the 1.27480 level, giving us an insight into the level of indecision in this market. Now remember that we are looking forward to the Bank of England's interest rate decision, which is coming up tomorrow. And of course, majority in the market are expecting that there's going to be an interest rate hike. And this is because of the inflationary situation in the United Kingdom economy, which is significantly on the high side, which of course will result in a potential increase in interest rate. And of course, when there is an increase in interest rate, it normally favors the assets that as the rate increase. Of course, majority of want to invest in that asset because of the high yield in return. And as a result of this, we are beginning to see some cautionary trading activities going on here in the last 24 hours as the selling momentum appears to be stalling, as you will see here that we're beginning to see higher lows re-emerge in this market. Now look at what have been happening here. We saw the lowest point here for the week had a 1.27840, 27480 rather, and since that moment we are yet to see price action break down that level or even come closer to that area, giving us a clue that buyers are gradually gaining momentum. Now since the early hours of today, we have seen another higher low, as you will see here. The inability of price action to break the previous low is a good signal that we might likely be seeing a bullish momentum. And if we take a closer look at the structure and taking into consideration the impulsive move that led us into this point, you will see that we are looking at something that is gradually looking like a reversal pattern in the form of a double bottom structure. And you know how we do it in this community. When price action falls into this or gradually transition into a reversal pattern, the next thing we want to be doing is to identify the neckline of that reversal pattern, which of course is going to be our yardstick to confirm that this is truly a reversal pattern. So with the situation we have here, we have a neckline situated at the 1.27980 level, which of course we are going to be positioning ourselves ahead of that area to join a bullish move. Now, sorry, I didn't label this one, so let's quickly label it. So we have the 1.27980 level, which of course you do want to mark out on your chart, as this is going to be a major determinant of buying opportunity if we do witness a breakout retest of that structure. Now, another interesting thing about this level here is the fact that it also shares a confluence with one of the descending trend lines we have here. So if you look at what has been going on since the beginning of the week, price has consistently remained below this descending trend line, further emphasizing the strength of that trend line. Now, if price action breaks out of both the neckline and that descending trend line, this is going to be a very good opportunity for us, a very good signal for us to confirm that that trend line may no longer have the capacity to continue to negate that bullish attempt. And if this happens, we are going to be getting ready to join a bullish move around this area. And I'm of the opinion that it's going to be very, very massive. Now, for those who are already profitable on the GBPUSD, you know we can afford to leverage on the profit we have made so far this week to test waters around this area by placing a buy stop order above that structure to capitalize on that move. But if you are new to the GBPUSD trade, I will be suggesting that you wait patiently for a breakout and retest of structure to confirm an opportunity to buy the GBPUSD. Then we should have a stop loss of about, let's say, about 20-25 pips stop loss, which will capture the previous low or just right below that descending trend line. Now, going into the New York session and London session today, we have this trend line as our yardstick. So as long as price action remains above this trend line, we shall feel comfortable in a buy position in this market. So with this current position here, I am of the opinion that price is likely, the tendency of price going higher is very significant at this point in time. So let's position ourselves above the 1.27980 to capture any bullish move. Now, in as much as we're looking out for buying opportunities here, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. So considering the fact that price action has been very bearish since the beginning of the week, we cannot ignore the potentials of sellers too as well. Now, if we are going to be selling the GBPUSD, of course, we will need price action to slice through that support line at the 1.27480 to give us a signal that sellers are here to stay, hereby taking out all the buy positions that we witnessed here during the early hours of yesterday's trading session. However, we can still afford to capitalize on that bearish move. That is, even before the breakdown of that support line happens, we can join even before that level happens. And the only way we can position ourselves is to see a breakdown retest of this ascending trend line. So if at any point in time price action breaks down the trend line, that doesn't mean that we are going to be selling right away, as we will need confirmations to happen, which of course will reflect on the chart as a retest of structure on our lower time frame before we can join, then have a sell stop order below the 1.27480 to capitalize on the downtrend continuation. But I doubt if this will happen today, but if it does happen, let's be on standby to catch that move. So that is my view here on the GBPUSD. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. So you can as well use that time to mark out these levels on your charts, as you will be needing them as a reference point to guide your trading activities today. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next instrument on our watch list. So the next instrument on our watch list for today is the XAUUSD, popularly known as the gold spot. And in fact, this is my favorite asset on our watch list, And we are beginning to see the same technical setup as what we saw on the GBPUSD, giving us a clue that the US dollar is losing momentum here. Before we go into that detail, let's look at how the week started for us on the XAUUSD. So zooming into the early hours of the week, we saw this situation. Price action actually started the week with a bearish momentum, as we saw lower lows and lower highs, as you will see here. But as soon as price action tested the 1,953 level, we begin to see buy pressure resume around that area. And as you will see here, that sellers struggle to break through that structure. So every attempt by the sellers to break through was met with strong resistance from the buyers to give us a signal that they might likely lose that stint there. And as a result of this observation, we said here that we are going to be anticipating the breakout of the $1,956.50 level to capitalize on a potential uptrend continuation. And as a result of this expectation, thank goodness we had our buy stop order above that structure, and we had our first buy position for the week. And remember, we kept on adding more positions as price action continued to break out key levels like the $1,960.40 level, and also the $1,963 level and the $1,967 level to maximize the potential of this bullish move. And in fact, for the first week, we were able to scoop in over 200 pips in profit on this single bullish momentum we witnessed at the beginning of the week. Now, following that situation, we begin to see some selling pressure resume, leading into this bearish momentum to the downside. In fact, I missed out on that move personally, as I was thinking that this could be a counter trend opportunity as price action nosedive to the downside. But some of us took advantage of that opportunity, and kudos to you. Well done to you guys for being on standby to catch that one. Then during the live session yesterday, I told us all that we are at a critical point, as I illustrated here. Let me zoom right in. So I illustrated here yesterday that we are at a critical point here where price action is back into that range where we took advantage of the buy position at the beginning of the week. And I was telling you yesterday that I was of the opinion that price action will climb new highs. And I told you all yesterday that for those who are already profitable on the XAUUSD, that you want to be having a buy stop order above the $1,956.50 level. But unfortunately, we were taken out of that position in a loss. And well, since we're profitable this week, it's still very okay for us. And remember, we also mentioned that if price action breaks down the trend line, we shall be getting ready to sell. So with the breakdown retest of that trend line, we position ourselves just right below the $1,953 level to capitalize on that bearish move. And as you will see here, price action moved over how many pips? Over 100 pips in our favor before the bullish momentum began, taking us out of all our positions with a modest size of profit. So far so good this week. We have been quite profitable on the XAUUSD. Now, going into the New York and London session today, what is going to be our plan, and how do we intend to capitalize on any potential trading opportunity at this juncture in the market? Now, I shared a commentary on the XAUUSD this morning. Let's run through it quickly, and let's see how we said we are going to be managing our position on this asset. So if you are with me on both my TradingView and Telegram platform, you will definitely have gotten an update in that regard. So let's run through this quickly and see how we said we are going to be positioning ourselves. Now, looking at the structure here, this is what I said this morning as regard to this current setup. So I said here that today's XAUUSD update reveals that all sell positions have been closed, resulting in a modest profit as the price action continues to remain confined within the 1,952 and the 1,948 zone in the last 19 hours. The market sentiment appears cautious ahead of the release of the ADP Employment Change data from the US economic docket, which will provide private sector employment data for the month of July. As this development unfolds, there are indications of a potential transition in the price action, forming a reversal pattern known as a double bottom structure. A neckline has been identified at the 1952 zone, and a breakout retest at this level could potentially trigger and confirm the reversal pattern. We shall keenly monitor the price movement for any signals that could influence trading decisions today. So now let's go back into the live chat and see what I was really talking about here. So the first thing I observed this morning was that price action was caught within that range between the 1952 and the 1943 level. Now, despite price action caught within this range, we can notice that we have been seeing higher lows in this market, just like what we saw on the GBPUSD chart. Now, looking at the structure closely, we saw the lowest point for the week at the 1943. We saw buy pressure emerge around that area, and since that time we saw a bullish gap happened during the later part of the New York session yesterday, a very strong bullish gap, which is a signal that we are likely going to be seeing a very strong move. Now, the next low is this area, giving us a higher low, and as a result of this, I was able to connect the series of higher lows here to give us this ascending trend line, which of course we are going to be using to guide our trading activities for today. Now, with this situation here, taking a closer look at what has been going on since the beginning of the week, we can see price action has been very bearish. We saw how it dropped into the 1943-ish. We saw price come back into the 1952, but the inability of price action to break down the previous low in the last 10 to 15 hours now is a sign that we might likely be seeing a bullish momentum, as the appearance of higher lows on any current market structure is a sign that buyers are gradually gaining momentum behind the scenes. Now, with this situation here, we might likely be seeing a reversal pattern where price could trigger an uptrend continuation. Now, when we start seeing reversal patterns gradually forming on the chart, the next thing we normally do is to identify a neckline, which of course we are going to be using to validate this reversal pattern. Now, for this reversal pattern to be validated, we want to see price action break out of that neckline, retest of structure to give us a confirmation that we are ready to go bullish on this market. Now, with the situation we have here, I would rather want to see price action slice through that 1952 level, first of all. Then a retest of structure on my lower time frame should give me a confirmation that we are good to join an uptrend continuation. So that is how we are going to be capturing any bullish momentum in this particular market. However, if price action continues to drop to the downside, and then the ascending trend line is broken, that is, if we see price action break down the ascending trend line, then at this point we will start considering selling. Now remember, we are not going to be jumping into a sell position, considering the fact that we saw a higher low here, which is a sign that buyers are building momentum. So we would need a confirmation before we can join any bearish move. So a retest of structure followed by continued selling pressure on our lower time frame will give us a signal that we are good to go bearish. Then if price action continues to find lower lows, then a breakdown of the 1943, taking out all the buy positions here, will give us more opportunity to capitalize on that downtrend continuation. So let's see how the market will play out, and if there are any new development and updates based on this current structure, I will definitely give you an update on both my TradingView and Telegram platform. So these are my views here on the XAUUSD. So our center of focus is simply between the 1952 and the $1943 level, at least for today's trading session. So let's see how the market will relate to the structure, and this will give us an insight into where price action is likely going to be going for today. So these are my views here. If you do have any questions, let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the last instrument for today. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So I will be moving on to the next financial asset on our watch list, which of course is going to be the last instrument we are going to be treating for today. So the next instrument on our watch list for today is the USDJPY, which of course we have a sell position running at this point in time after noticing the breakdown of that ascending trend line. So let's run through how the week started for us here. Let's see how the week started. Okay, so the week started on a very strong bullish note. Remember, we had a range initially between around just our key level at the 141.00 level. If you do want to understand how we identify that key level, please watch the video on the USDJPY right in the description box of this video. They are duly timestamped so you can easily navigate to whichever aspect of the video you're watching. And in fact, it will also help you. It will also serve as an educational tool to help you understand how to use price action to identify potential trading opportunity in the market. So you want to check that video out. So we saw price action range between the 141.150 and the 140.700 to give us an insight into the level of indecision at that particular point in time. And of course, you know how we do it. Whenever we have this kind of range, we want to wait for a breakout or breakdown of that range to give us an opportunity to trade. You see what happened here. Price action indeed broke out of that range. Of course, I missed out on that opportunity as this happened very early in the midnight, and I was fast asleep when that happened. But for those who took advantage of that one, well done to you for being on standby to catch that move. So despite missing out on that opportunity, we waited for another new opportunity to emerge. So one of the scenarios we painted on Monday is that we are likely going to see price drop back to retest the structure to incite an uptrend continuation, or we might likely see a trend continuation pattern where the breakout of the 141.950 will welcome a signal that price action is going uptrend. And that is where we capture that move right there, and we capitalize on that move. We joined right here. We added more positions at the breakout of the 142.500. We also added more position, had the breakout of the 142.850. So we had a minimum of 3 positions running, giving us a significant amount of profit on that single bullish move. Now remember what I told us all here yesterday, that we have an ascending trend line which we said we were going to be using to guide our trading activity, and that as long as price remains above that trend line, we will feel comfortable in our buy position while we also look out for more opportunity. Now remember, we said that if price action breaks down that trend line, then we are going to be getting ready to sell. Now look at what happened here. We saw price action give us a signal yesterday that we are going to be seeing a selling opportunity come in, but it didn't last long as we saw buy pressure resume around that area. Now the inability of price action to break out of the previous high here was quite a significant signal that we might likely be seeing a bearish move. Now with this situation here, we saw a lower high, as you will see, leading to the breakdown of that ascending trend line. So if you had missed out on that opportunity, we had the 142.850 level, which was another area needed for price action to break down to join a trend continuation. So if you are taking advantage of this move, well done to you for taking advantage of this potential opportunity. Now, with this situation we have right now, I would advise you to move all stop losses to secure this current sell position, and the entry point here is most appropriate to secure this position on all positions. So if you have 2 positions running right now, move all stop losses to the area around the 142.850, and let's see how far this bearish momentum will go. Now, with the current situation we have right now and the fact that price action just broke down our ascending trend line, things are going to be looking very bearish going forward unless something significant happens here. Now, how do we intend to capitalize on this move? Now, for those who had missed out on this opportunity and those who intend to add more position to this trade, and for those who want to have an understanding of what technical expectation we want to be looking at on this current chart, let's dissect this closely and see how to position ourselves. Now, the first thing first here is that we have noticed a lower high, which from a technical standpoint is a sign that sellers are gradually gaining momentum behind the scenes. And the next thing we want to be doing here from a technical standpoint is to connect the series of lower highs to give us a trend line to work with for today's trading session. Now, if we bring out our line chart to have a specific point of connection, you will see that we have something like this to work with for today. So now with this trend line marked out on our chart, we are going to be selling as long as price action remains below this trend line. So we have no business buying as long as price remains below this descending trend line. So now let me bring back our candle chart right now. So even though we begin to see some buy pressure resume around this area, it could be a retracement of the breakdown that just happened, where price action could either come back into this trend line to retest it and signal an downtrend continuation to the downside. So this is one scenario we can look at to capitalize on a bearish move. Then secondly, remember this ascending trend line was broken. So let me extend this out a little further. And you know, from a technical standpoint, when price action breaks down a key structure such as this ascending trend line, we expect that price is likely going to come back to do a retest of that structure, where continued selling pressure is likely going to be inciting a sell-off in this market. So now with this situation here, if this buy pressure continues, we don't need to worry. We don't need to show any panic at all, as we might likely be seeing the attempt of price to retest the structures we just identified to incite a bearish move. So all we just need to do right here, if you have a sell position running, move all stop losses to that zone I just identified around the 142.850. Let's see how this move will go. And in fact, if we are stopped out at our stop losses, then let's see if the market is going to be doing any retest of either the structure or the structure. And most importantly, what we want to be looking out for is a continued selling pressure on our lower time frame around that area, so that we can join that bearish move. And of course, I will be giving you updates in the comment section of both my trading view and Telegram platform to guide our trading activities for today. Now, if we are looking to buy, well, for me personally, I want to see price action climb back above that ascending trend line before I could consider buying, or price break back and then retest. Then if continued buy pressure appears above that descending trend line, then we could consider buying the USDJPY. But of course, I will be giving you updates in the comment section of both my trading view and Telegram platform on what we are going to be doing if that situation happens. So these are my views here on the USDJPY. So for today, we're looking at the bearish momentum unless the structure states otherwise. So let's see how the market will play out going forward. I will be giving you updates on both my trading view and Telegram platform. So if you have any comments or you have any inquiries regarding this current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see what is happening in the comment section before I draw the curtain for today. So I see your comment, Fred. Fred is asking that, do you use sell or buy orders, or you manually execute your trades? Very beautiful question, Fred. But it appears you haven't been listening to what I've been saying. Yes, you haven't been listening. Now, I have always buttressed and emphasized how we are going to be executing our trades in this on every current market structures we identify in this session. Now, there are two ways I always state here. Technically speaking, we always wait for a breakout and retest of that structure before we want to be joining any potential move. Now, if we have an uptrend, a bullish trend, for instance, and we have a range, then the tendency of price action breaking out of the resistance line of that range is higher. So having a buy stop order above that area seems much reasonable at that point. Now, in that same scenario, when we have a bullish trend like this, when we have a range and price action breaks down the support line, then it needs a confirmation for us to join the downtrend, because the breakdown of the support line could turn out to be a false one, considering the fact that we have a bullish trend. Now, we want price to break down the support line and retest it for us to join that decline. Now, secondly, the second way is this. Now, if we are already profitable in whatever position we are in, I always emphasize this. If we are very profitable in whatever trade, whatever asset we are about to execute, we can afford to leverage on the profit we had made so far and having a buy stop order to test waters and see if the buy position will trigger. Now, let me give a visual representation here using the scoring market structure, for instance. Now, in this kind of scenario, we have been very bullish since the beginning of the week, where price action has consistently respected this ascending trend line. Now, in this case scenario, for instance, I was having a buy stop order above the 143.460 because I was already profitable on this asset. So I'm just leveraging on the profit I've made so far to test waters and see if the market if a buy position will click above that structure. So even if it clicks, then I'm good to go. And if it doesn't click and I'm stopped out, I'm still profitable because I just reached 1% of my account or 0.5% of my account, leveraging on the profit I'd made so far to capitalize on that move. Now, if you are someone who is just entering the trade for the first time, I always emphasize this, then you want to wait for the technical setup to mature. And what do I mean by that? So if a breakout of the structure happens, you scale down into your lower time frame, like your 10, 5, or 15 minutes time frame, to look out for patterns and structures that will support the idea that price action is going uptrend. Now, what do we look out for? We wait for price to come back and retest the structure. Then if we start seeing something like a double bottom structure, head and shoulder pattern, or consistent rejection of that level, giving us signs that sellers are finding it difficult to stay below the 143.460, then at this point we can now join that uptrend continuation. So that is how we normally take advantage of potential trading opportunity in this community. So I hope I made myself very clear there, Fred. If I didn't, please let me know in the comment section, or you can contact me one-on-one and let's talk about this. But I do hope I made myself clear. So are you still around, Fred? Let me know in the comment section. I see your comment, Richard. Thank you very much for your compliments. Thank you for your support. I really do appreciate from the bottom of my heart. Thank you very much, Richard, and do have a wonderful day too. So on this note, I would like to call it a day here. It has been a wonderful moment. Please and please, everyone, before you sign off, please support this project by clicking on the like button. Your likes are very valuable to me. It's a source of motivation and inspiration for me in this community. Please support the project. Click on the like button. Your likes are valuable. And of course, it helps the YouTube algorithm to spot this video and push it to a wider audience of traders who may find this content beneficial to them too. Thank you very much as you do so. And that reminds me, we are going live today again for the XAUUSD live monitoring window, where we are going to be trading the XAUUSD together, managing the position on the XAUUSD. So you want to be joining me live on the XAUUSD live monitoring window and engaging in the comment section too as well. I will be sharing the link to that session before the session begins. It normally begins 5 minutes before the New York session begins. So I want you to be part of that session. And if you are not subscribed to this channel, please do, so that you can get notifications whenever I upload new videos, and of course whenever I'm going live on the XAUUSD live monitoring window. Thank you very much for being around. I see your comments, Fred. I'm glad you found that very useful, and I hope you are able to use it on your subsequent trades. So on this note, I wish you all best of luck, and I look forward to seeing you in the XAUUSD live monitoring window as we get prepared for the New York session on the XAUUSD. Do have a wonderful evening, everyone. Bye-bye.